Going on, guys? Just want to do a trade recap for today, October 2nd, and let's just jump right into this. So coming into today, as you can see, we are looking overall very bullish, right? We are reacting on the daily time frame off this daily fair value gap, which we respected, and then made a push higher to all-time highs. And we also did on ES as well, as you can see right here, no SMTs. So this is okay. So coming into market open, we are right here, right? So we have this very small 4-hour gap and we are at all-time highs. So yes, I do want to see a continuation higher, right? We are still moving higher. We are respecting bullish PD arrays. We are not disrespecting them. And we are not forming bearish fair value gaps or displacing lower. This is coming into market open. As you can see, everything still looked good. Now, at market open, I wanted to see us either continue higher right into right here. This is the 4 and 4.5 standard deviation range of this hourly manipulation leg in Asia session, right? So usually when you don't have targets at all-time highs, it's very obviously you don't know where price is going to go. So what I like to do is try and use whole numbers, and I like to use manipulation legs and get the dealing range projections from them, the standard deviations. So if we were not going to continue higher, which obviously I was bullish coming into open, I wanted to see a reaction lower right here because we were at 2 to 2.5. We were at 2.5 standard deviations. And the most important standard deviations, which I've seen being used time to time, is like the 2.5 area and the 4 to 4.5. 2 to 2.5 and 4 to 4.5. Those areas are the most reactive. So as you can see right here, this is 9:30 open. We dumped right at open and we had this 1-hour fair value gap, which clearly you could see was getting disrespected. But we get this super strong down close candle open. I'm pretty sure we had a 15-minute as well. Yes, we had this 15-minute as well. Got disrespected. This. All bullish PD arrays got disrespected on this 1 5-minute candle. Now, I wanted to see lower prices. And what was I targeting? I had London lows down here, Asia lows here, right aligned with previous day closing price. Now, on top of this, I also realized that we were going to have a regular trading hours gap, overnight gap, whatever you want to call it. Here we go. So I'm not sure why it looks like this. It should not. Okay, so this is where we open right here, right? So this move right here, this entire thing is a gap. 165 points is the overnight gap. So I want to see this get filled, at least 50% of it. So as you can see right here, I have these quadrants marked out in a light color, right? This was a sell side draw for me. This was just, let me get rid of this. This was nothing. This was just targeting a 5-minute high if we were going to flip. But this is the first low I was looking at. So I have these overnight range gap quadrants marked out. I have midnight, previous day high, previous day close. So after we get that displacement lower, I'm looking to try and catch a short. As you can see right here, we create this 9:30 fair value gap. This is not the first presented fair value gap because it is the first fair value gap formed after 9:30. We do not get any reactions off of this, right? So it looks like it's being used as a breakaway gap. Now we come down into this 15-minute gap and we form this very small first presented fair value gap. Now, a lot of you might be saying this fair value gap is so small. Why are you using it? Now, let me break this down for you very quickly. A fair value gap is an imbalance in price, meaning there is not evened out sell side and buy side delivery. These large fair value gaps that you consider fair value gaps, these large candles are not fair value gaps. For instance, this right here. This is a perfect example. Yesterday's 1-minute candle. If you watch this in real time, we came lower and we shot up. This is a 65-point candle. And we did not like slowly go up. We just ran straight up. There was no price action. This is a liquidity void. Liquidity voids need to get filled in and closed. Fair value gaps react off of. If this was a fair value gap, we would have got a reaction off and moved higher, but we did not. This is clearly a liquidity void. There is no price action here. We just ripped straight up, mooned right away, right? So on the other hand, we're not getting like these on the 5 minute, yes, but we are getting imbalances. These aren't liquidity voids. These candles aren't as big. They're a third of the size, and we get, a rebalance into an immediate rebalance into half of that, right? So this right here is a fair value gap, and if price wants to continue in the direction that it is displacing in, we will respect the small fair value gaps. Those are the imbalances in price. The reason why we come back to retest those is because we need to fill the orders that were not filled throughout that imbalance candle, right? So we fill that and immediately dump lower. I'm like, okay, we're probably going to head lower. We have this draw right here. This was just, a 1 minute sell side draw. And then we also had low here and London down here right around 054. So I see we take London pretty quickly. This was a good trade. You could have taken it after the reaction off of that first percentage gap. That was actually a very clean trade. You could have taken this down into, even if you only took it into 50% of this range, the overnight gap range, or you could have taken it down into midnight, or you could have taken it down into London, right? You could have done so many things with this. It's all about your risk to reward and everything and what you like to take. Me personally, I don't know why. In the moment, I just didn't jump on this, even though this was a very good trade. Then we come down, we sweep out London, and we also had Asia right here in previous day closing price. And I was like, we haven't retraced yet, and I still think that we're going to get Asia, and we're going to fill in that entire, overnight gap, which we did not fill yet. So we also had this 4-hour bullish fair value gap. Now this isn't a large one, but these are the ones that you usually see reactions off because these are the actual fair value gaps. You're not going to see reactions off the imbalances. Like this right here. I mean, that's a huge, we could use it as a fair value gap for sure, but like look at this right here. We cut through. It's probably a liquidity void. The massive candles, a lot of times, not always, but a lot of times are not going to be fair value gaps. They are liquidity voids. Okay, so back to my trade. I see we leave these lows right here. ES left equal lows. We still left Asia, and the gap has not been filled. And we have this 4-hour bullish fair value gap sitting right below, which I wanted to see us trade into. So as you can see, retrace into this 1 minute. We get a retrace into the 2 minute. And we get a retrace on the 3 minute, all while respecting, and reacting off midnight opening price. So what do we get here? I want to see some sort of reaction off that fair value gap. I'm not just limiting in. And we get this right here, right? This is what I took. I believe my stop was actually higher. It was probably above here. And I went break even at this internal range low. Right there. That was my break even point. And we displaced. Then you see we got edged. Right here. Retrace into the fair value gap. And then dumped it lower. But that was my trade for the day. Just a continuation short after 3 minute, 2 minute, 1 minute gap taps. Rejecting off midnight opening price. And targeting Asia lows. This trade, as you could see, we got a 30-point candle basically after I entered. This is what you want to see when you're taking a continuation trade. You don't want to see us dilly-dallying. So, in my opinion, this is a really good trade. Contrary to what I was, believing going into the day, I wanted to see higher prices. You don't really always want to be looking to take shorts at all-time highs, but if the opportunity presents itself, you have to be able to take it. And that is why it is important not to marry a bias, because if I was married to the bias of long, I would have only been looking for longs today, and that would have done me no good. But instead, I saw the displacement. We were disrespecting bullish PD arrays, creating bearish PD arrays. You have to be willing to adapt in these markets. You have to be able to understand what price is doing. Now, After we tapped into this 4-hour gap, we did see a reaction off it. We did leave very relative equal lows. So we'll see if price wants to come back and revisit those. We did return back into the range around the optimal trade entry spot and 25% of that overnight gap, which we are rejecting, and this 15-minute that was used as an inversion fair value gap. Now, we will see what happens tomorrow. We were supposed to get non-farm payroll numbers, but since the government shut down, we are not getting that news, so we will see what happens. Hope you guys enjoyed this video. I'm going to try and be more consistent with these. Drop a like and a comment and show some love to this to show me that people are actually watching and, this is insightful for you, and I'll do my best to keep making them. Hope you guys all had a good day, stayed safe, and I'll see you guys tomorrow.